Good evening to all of you. Well, it's fantastic to have so many of you online, and I do want to say that we're down here having a strategy session in Neisner at the moment, and it's so good to have so many people online. But if we do have any internet challenges, then I will be phoning in on my telephone because unfortunately, when you live in South Africa, you can have the sunshine, but you can't have the internet. They're mutually exclusive. So if we do have any problems, give us a shout. As you know, if most of you have been on webinars before, if you've got any questions, please fire away and you can we'll try and answer them, or if you wait until the end, we will be able to answer them. We've got an awesome bunch of people who are on tonight, and really Wealth Migrate is really a passion of mine, and it's something that our wonderful team has worked really hard on for the last 5 years. And just to give you an idea of who's online tonight, we've got Henny. Henny's our business partner in Wealth Migrate. He's actually listed two companies in his time. He's taken a company from scratch and listed it twice. He's been involved in property for well over 20 years, mainly commercial and residential development, particularly in the medical field as well. Huge amount of experience with regards to commercial property and been very influential from a mentorship perspective on my behalf. And a lot of the business trips that we've done both to Australia and to America, he's been very helpful for Brendan and I in terms of teaching us what's been happening. You've got myself. I've been helping people invest in international property for over 10 years. I personally have been investing in international property for over 15 years. We've helped over 2,000 people to a value of about 1.7 billion. And then my business partner, Brendan, is also online. And Brendan also has been investing in international property for a long time and was one of the first people I know to invest in American property right at the perfect bottom of the market. And so it's awesome to have our investment committee online and then it's a great honor to have John as well. John, it's about lunchtime, I think, in America. But John is coming live from Orlando. John, where are you in Orlando?
Yeah, based in Orlando. I'm here right now.
Awesome. And I'll go into in a little bit more detail, but John is effectively our asset manager based in America. We've also got some best of breed partners on, which John is going to introduce later. I know that we're trying to hook them up as we speak, and he's going to be explaining, and between myself and Brendan, we're going to also be explaining who the partners are. It's one of the biggest things we pride ourselves in with regards to Wealth Migrate is the partners on the ground. We've got our legal counsel. We want to take them through and introduce them to you. Brendan, that's actually a good point. If you can just look out for Ed as well, because he should be coming online. And then lastly, the accounting side, Grant Thornton. And I can see that Mandy is online. And Mandy, you'll be very glad to know that Bruce and myself have been bouncing emails back and forth. And interestingly enough, Bruce is actually an ex-South African, ex-BDO partner, and he moved over to Atlanta in 1998. And all he's been doing is property acquisitions, property funds since 1998. They've been doing transactions between $5 and $60 million. And I think if I stand corrected, Brendan, they said they'd bought about 6,000 apartments in the last 5 years.
Yeah, about 6,000.
It was something substantial like that. So
right across the whole of the USA.
Hugely intelligent guy. Also, the great thing is he's a South African and really understands where we come from as South Africans. And as I said, been in Atlanta since 1998. So we've got a large array of people online tonight. If you do have questions, then please fire them through. And if we can't answer them up front, we'll answer them at the end. Because the most important thing we want to achieve tonight is transparency. One of the cornerstones of Wealth Migrate is transparency, so that we can basically help you understand what's going on. You've got complete clarity with regards to the investments, the process, the procedures, the partners, and everything we're doing. And so that's the purpose of the webinar tonight. For those of you who've been invited, this tonight is very much a private webinar. This is not a group listing. It's only been by private invite only. It's great to have you online. It's a real privilege and honor to have so many people online. And we want to thank you for coming online. But please do understand it is private. It's only for sophisticated investors. We really want to partner with like-minded people. And so we got our team to personally phone you, personally send an email, personally send a text message so that you knew about it. And for some of you, just as a recap, a lot of you have been on buyers trips with us. But just remember, Wealth Migrate is not a fund. It's not a syndication. We're not like Growth Point. We're Redefine. We're not like ShareMax or Blue Zone. And the reason we're completely different is that there's no fees. There's no fees at the beginning, there's no fees in the middle, and there's no fees at the end. Our interests are completely aligned. We also co-invest. So we co-invest. So not like a fund where we try and raise as much money as possible under management, and then literally we live off the 2% management fees, whether it goes up or down. Or as an example, the fund that I looked at in Australia, and I'm not going to mention it, but one of the top banks from South Africa, where the bank was taking the first 15% before the investor made 1 cent. Or on the other hand, a syndication like Shermax, where they took the first 26% before they even invested. Both of those situations make money whether they invest in good property or bad property. At the end of the day, all that they really need to do is invest, because that's how they make money. Their interests are not aligned. Our interests as investors, as co-investors, our dollars are as green as yours. Our dollars are treated in exactly the same way. We are putting our cash in. We've got complete transparency.
Hey, Scott, it sounds like Scott, you might have to call in because I'm hearing you intermittently.
Okay, perfect.
I can see the slide, but it sounds like your audio is coming in and out.
Welcome to GoToWebinar, Web Events Made Easy.
Okay, guys, if you didn't hear me earlier, Scott's just going to call in on the cell phone because we're having internet connectivity issues. The slide should still be up, so just give us a second here. Let's get a redundancy thing going here, and we'll take it from there as soon as he's called in. So while we're waiting over here, if anybody can see the chat box underneath there, you can load questions in the question field over there. If you have any questions during the course of the webinar, just feel free, load the questions in. We'll be able to answer them on the fly. And please let me know if you can hear me while we're running at the moment.
I can hear you, Brendan.
Yeah, Brendan.
Sounds like the speaker's on loud behind you.
Okay, are you in?
Yeah. Okay, guys, sorry about that. I always say one of the best things I learned from an Accenture consultant as to why SAB was successful in China is that us South Africans are experts in chaos management. So, yeah, no, 100%. Ed's here, so if you can let Ed in, that would be fantastic. I just want to really finish off in terms of where we are and why we're different. And the most important thing with us is that there are no fees. We co-invest with our investors, and we only benefit after the investors have actually made money. Just to give an idea in terms of what's happening, it's an organization that is globally recognized called crowdsource.org. And interestingly enough, we've actually got a lawyer that specializes in this based out of Belgium that is currently putting our application through, and it should take about another 2 or 3 weeks, he tells me, to be able to get our application through and registered. So literally, it's like being registered not in one country, but registered with the most important body globally. What is crowdfunding? Crowdfunding is exploding. At the end of the day, crowdfunding is where a lot of people come together, like-minded investors, and with the power of the internet, have the advantage of collective buying power. They have the advantage of taking over the world. And basically, it's gone from 500 billion to 1.5 billion in less than 2 years, and is growing by more than 50% every single year at the moment. Mark my words, this is going to revolutionize the property industry. It's going to destroy banking as we currently understand it, plus the insurance industry, et cetera, et cetera, et cetera. And if you want to look at it, Deloitte came out in January 2013, and they spoke about the 10 most significant predictions that were going to impact the marketplace in 2013. And number 5 was crowdfunding portals. Crowdfunding portals will be worth $3 billion, 100% increase on 2011. So this is something that's significant. It's something that's changing. It's a massive trend, and we need to be able to stay ahead of it. What does it do? What does this solution provide? It basically provides you with access to economically resilient global property investment opportunities. It also provides you with property investment expertise, people you're going to meet tonight, best-of-breed partners locally who have in-depth investment and property knowledge so that you're not trying to do everything yourself. It's also got a lot of simplicity. Anyone that's ever bought a property, even more importantly, anyone that's bought a property overseas, will understand that there's a huge amount of admin that's involved. A lot of paperwork you've got to fill in, a lot of compliance, a lot of trying to raise the finance. The difference here is that it's simple. It's effectively you own 10% or whatever you put in, and we do the work for you. It's very passive. If you want to sit back and have a passive investment experience, then this is what will allow you. It will help you to have wealth preservation, a plan B, and most importantly, peace of mind. It allows you risk reduction through diversification across different markets and properties. When one takes into account, Henny, as I said to you, is not only my business partner or our business partner, but also my mentor. He said he would much rather have 10% in 10 buildings than 100% in one building. And when you look at Warren Buffett and many of the other investment gurus, it makes perfect sense. And it's now not just about having it in one property. It's about having it in different asset classes. It's about having it in different currencies. It's about having it in different countries, so that you're not exposed to one political or economic system or one currency. And lastly, there's an elimination to barrier to entry. A lot of sophisticated investors particularly like commercial property. They want to go overseas, they want to do commercial. But suddenly, to get in entry level is $5 to $10 million. That's 50 to 100 million rand. There's not a lot of people running around that have that type of capability. And to be honest, even if they have that capability, they don't want to put all their eggs in one basket. So this eliminates that barrier to entry and gives us collective buying power so that we can work together and take advantage of the best opportunities globally. To give you an overview of our experience and our vision, this really here, residential Australia, we've already done that. Henny and myself went over there about 4 years ago and actually started investing with a local partner, with a best-of-breed partner on the ground. And we actually took that investment. We started off with about $4 million, and last year we actually listed that investment for $40 million. So it was partnering with best-of-breed partners on the ground, exactly our model of working on a 50-50 basis with local partners, where we would put in the capital, they would bring their expertise and their capital, and we would go 50-50 in the deal. We would sell off 50% of the development, we would hold 50%. That's how we were able to accrue the passive income and ultimately list it. We've been looking at commercial opportunities literally for the last 5 years, but at the moment we haven't been able to find opportunities that would be able to get a good enough return for the investors. And so although we've been over probably 5 times a year for the last 4 years, we just weren't able to find the opportunity. And it was really when Brendan and I were in America last year in April that we got hugely excited. And that's where Wealth Migrate America literally got off the ground. And we've got 2 opportunities we're looking at. We've got the residential opportunity, where we've got the income plan, which is where we buy and hold for 5 years. We effectively benefit from the market. We have passive income, and then we hold it for at least 5 years, and we benefit from the upside. And then we've got the growth plan, which is a much more aggressive strategy, where we take advantage of the market now, and we literally buy stuff, we renovate it, we flip it. And then obviously we've got the commercial opportunities in terms of, and we're really privileged tonight to have John online, and he's going to take us through all these opportunities. I want to really reiterate to you the whole principle of nature. You know, you've heard me say this so many times before, but a bird that's flying in a flock, 25 birds, can fly 70% further than a bird flying on its own. And I want to give you a personal example. This here was a product that I was emailed. Let me just find it quickly for you. Where's it gone? How do I find an Adobe document? I just opened it on my screen. Yeah, there it is. Okay, so this is a document. You'll actually see it's a very professional document. These opportunities here are in North Dakota, and interestingly enough, there's a return, a net yield of 46%. Well, yeah, I mean it really does. And often in life, they've got that whole thing that if it's too good to be true, there's always it's a whole prospectus that they put together. So what do? One of our investment principles is we always go and investigate. So with John, myself and Henny flew over to North Dakota, and we checked it out. And interestingly enough, when we arrived, and we'll go into this in more detail just now with John, but we determined that there is an opportunity in North Dakota, that the oil is sustainable, that America will effectively become it'll become self-sufficient by 2017, and most importantly, what's going to happen is that this oil is there for the next 80 years. And so what's really exciting is that there's a huge opportunity with regards to housing. And so what happened was we went in there, and everyone's trying to do housing. We looked at this particular opportunity, and we analyzed it just in our interest. These guys are selling these properties, and I can actually show you here quickly if you're interested. Where's it gone? The total price. They're selling them, there it is. They're selling them for $49,000, call it $50,000 each. And if you buy the entire thing, then it's $290,000. Well, when we were on the ground, John Chin had a partner on the ground, and this guy's been going there for the last 19 months. He literally flies up every single week. He's currently invested $60 million in North Dakota, in the area, dealing with the biggest funds off Wall Street. And we went and he introduced us to all his partners, literally from the guys that did the town planning to the builders, to the developers, all the influential people. It's a small town, it's only got 7,000 people. And they said, do you know that these little man camp things that they're bringing in, these trailers is the best way to describe it, they're buying for $70,000. And they're selling to people for $290,000. Okay, interestingly enough, not only are they selling them for $290,000, they don't own the land. So they're leasing the land, so there's no asset. On top of that, we went to speak to the head of planning for Buchan, or Watford, which is the town. He said, we don't want these man camps. We have to have them right now because we don't have enough product for people to live in. But what we've given them is conditional use. And so what conditional use means is that they can live there, but the moment we've got traditional houses, traditional apartments, we will cut their planning route, and so effectively these guys are buying an asset that has well, it's not an asset, okay. Secondly, it's going to get shut off as soon as possible, probably in the next 2 to 3 years. And thirdly, all the rental predictions are on $130 a night, and we went and looked at the best product right in the center of town that was renting between $90 and $110 a night. And most interestingly enough, you know, this is 5 miles out of town, and they reckon they're going to get $130 a night. My point of my whole story was that by dealing with best-of-breed partners, by using the laws of nature, we partnered with John. John found the best person on the ground. We immediately tapped into the best people on the ground, and they uncovered a massive opportunity. And I'm going to leave it a little bit later for John to tell us about that opportunity. But you have to think laterally. You have to have someone with the experience that they need to be on the ground. You have to have John to have the experience to find the right people on the ground. And in less than 24 hours, we uncovered a home run. And I mean, and it's not man camps. In fact, it's not even residential. For those of you who want to know about commercial, it's a purely commercial opportunity in terms of where we're at. But as I say, I'm going to hold you in suspense in terms of John letting us take us through that opportunity. Something else that I think is very important, we've done a huge amount of work with Grant Thornton in terms of where we are, in terms of the tax, the structuring, and the compliance. I'm not going to go into this in a huge amount of detail, but sorry, I'm still getting used to my Apple Mac here. But if I get
Scott,
back
while you're flipping around there, Scott, if you want to talk a little bit slower because the phone quality doesn't sound as clear.
Okay, excellent. Thanks for the update. Okay, so I have to be less excited than...
If you're using a headset, Scott, I would take that off and just talk directly into the phone. I don't know if that's the case.
Okay. So, John, what you're saying is I have to get less excited and talk slower about this opportunity that I'm super pumped about.
Yeah, that actually sounds a lot better, what you just did.
Okay, excellent. So I'm not going to spend any time on this, but this is the proposal. We basically got Grant Thornton South Africa to deal with Grant Thornton America and to go through all the implications from a tax, a structuring, and a compliance. They've been through exchange control, the US regulations, the tax, and everything else. We've got a full opinion. There's basically 2 options, whether you want to invest, and it depends whether you're investing from South Africa or whether you're investing through an international entity. We've got all the pros and cons. You can actually see the structure there. But in simplicity's sake, what we're actually doing is that here you've got the US real estate, let's just call it a house. There's an LLC, which is effectively a special purpose vehicle, and then each individual has their own LLC. And that LLC invests, so say for example, I put in 10% of my money, then I own 10% of the shares, and that company owns the property. There's nothing clever, there's nothing complicated, there's no middle management or anything like that to siphon off the money. And this is very, very important for us, simplicity and transparency. So this is the opinions, and as you can see, there's option 2, and this is if someone actually wanted to go through a foreign structure. They looked at numerous different countries, including Malta and many others, and actually came back to Mauritius in terms of where we actually are. We've got all the tax rates. And then most importantly, we've actually got the options in terms of the breakdown between the two, in terms of where they are. And then obviously they've got their good old disclaimer, as most accountants do. But that's obviously now very much our IP in terms of where we are. But for our sophisticated partners that we work with, we share that IP, obviously, because, you know, they are our partners, we work with them. And as a matter of interest, Ian Scott is the managing partner of Grant Thornton and is actively involved with us and actually helping us from a compliance perspective and making sure that all the due diligence is done on the projects in terms of where we actually are. From a legal perspective, interesting enough, we've actually got Ed online. It's a short story, but there's a gentleman called J.T. Fox. And J.T. Fox is an incredible guy. He's only 33 years old. He already owns 43 companies. And he's been out to South Africa. And he basically works and is mentored by George Ross. Now, George Ross is the accountant of, sorry, not the accountant, the lawyer of Donald Trump. And I had the huge privilege of playing golf with both JT and George Ross. And we literally spent the day together. I was very lucky. I actually shared a golf cart with him. So I got to discuss literally property with Donald Trump's right-hand man. And what was fascinating is that weekend we actually had an event where JT had brought out George, and he also brought out his personal lawyer. And sorry, just before I show you that, that's actually me. If you want to go on YouTube, you can see me interviewing George Ross and asking him a whole lot of questions about the local market and where it was. But that weekend, I actually met JT's personal lawyer, basically the guy that does all his legal counsel, a guy called Chuck Brett. And Chuck actually jumped up on stage, and I was fascinated because he said, listen, we specialize in helping people invest in property in America. We specialize in doing the funds. We specialize in compliance and the tax and all the legal issues. And so I was hugely excited. I literally ran up to the front of the room and met with him, and we had a great chat, and we had another private meeting. And I was very, very impressed when Henny and myself and Brendan and Baynard flew over now on our sixth trip, and John was there with us. We actually met with Chuck and Ed, his partner, and they flew down. They're based in Chicago. They flew down from Chicago down to Atlanta to meet us, which for me is very impressive. I like the attitude. The attitude was, you guys have flown all the way from South Africa to see us so we can fly to Atlanta. And we've been going back and forth in terms of trying to get all our stuff and in terms of where we are. And I can see actually Ed's online, so if you can just is Chuck online as well. So if you can just unmute to them there quickly. So we got Ed and is it? Okay. So we've got Ed and Chuck online, and obviously it's a fairly new relationship for us, but an extremely exciting one, because we want to really, we want to have the best legal team on the ground to make sure that we have the legal compliance and all the due diligence that's being done. So I'd like to just welcome Chuck and Ed and say, guys, it's awesome to have you on the team, and thank you so much for being part of this webinar tonight.
Thanks for inviting us, Scott. It's just Ed. Chuck's in the middle of a trial, so he's left the communications with you guys to me today.
Hey, do me a favor. I mean, it's great to have you online. You did warn me that Chuck had a big court case today, and being in America, we didn't think anything else when you guys were having legal issues. But tell me something. Just tell us just a little bit about yourself, your experience with regards to everything you said with funds and putting stuff together and the compliance and the legalities and everything else, just so we understand who we've got as our team on that side.
Sure. I'll just go through some of my resume. Coming forward to how I got to Chuck, one of my jobs early in my career was an enforcement attorney for the Illinois Securities Department. And so basically what I did was, as an enforcement attorney, I looked at these types of deals, and if there was something amiss, then we would initiate enforcement action. So early in my career, I got an opportunity to actually analyze other people's proposals for deals, and then prosecute on behalf of the Secretary of State Securities Department those deals that were not properly put together. Shortly thereafter, and immediately after being an enforcement attorney, I went to work for what was then called the National Association of Securities Dealers, which is the self-regulatory agency that regulates securities brokers. And one of the functions of securities brokers, obviously, is to put together these types of deals. I was there for 17 years, so I'm not as young as you are, Scott, but I was there for 17 years. And then when I left the National Association of Securities Dealers, which is now called FINRA, they changed their name a number of years ago, but I went from there to a private equity firm and I was general counsel of the private equity firm. And that private equity firm basically did the type of structures that we've talked about with you for your investors, create an LLC to invest in either an entity or a property. And so very familiar with putting together those types of deals.
Well, fantastic. And I mean, look, Ed, from your background, and obviously, you and Chuck are working with JT, it's really awesome. And I know that Chuck is due to come out to South Africa again. I'm not sure if this year, but I know he's certainly coming out early next year. So it's definitely something that we will like to introduce our investors to you guys. But if anyone's got any questions or anything, if you could find them through and we could possibly answer them. I'm not sure, Ed, how you are for time. But if there are any questions, Brendan, if you can just take a look while Ed is online, and we can actually ask the guys, because I know that they're very busy in America. But Ed, it's wonderful having you online. I really appreciate it, and we really, it's such an honor to be working with you guys, and we're really excited about the future and having such a massive, massively competent legal team on our side to make sure that we're winning the battles over there and doing everything right.
Well, thank you, Scott. It's a pleasure to start working with you guys as well, as we've talked about over the last month or so. So we're looking forward to helping you guys put together the deals that are going to help your investors, and everybody's going to win.
Excellent. Well, so just so everyone knows, from a legal perspective, there's a number of things that Henny, from his experience with regards to listing the fund in Australia and all his commercial experience here, has actually asked, and between myself and Brendan and Bainant, we've been asking, and John actually, we've been asking for different stuff, and we've been working with Ed and Chuck to be able to get that done. So, but obviously that's a work in process, and making sure on every deal we're doing stuff right. So that's where we're at from a legal perspective. And then really from just in terms of the history, this whole thing started back in London in 2008. And really when we had the global financial crisis, and the developers over there literally just panicked and were selling stuff off at more than 50% discounts. And there was a building in Wimbledon that we could pick up for less than 50% of what people paid for it 3 months before. It was fully tenanted, fully let out, and all we needed was a cool, calm, collected £10 million to buy the thing. If we'd bought it, well, today we'd be laughing all the way to the bank with the passive income. But I unfortunately couldn't raise £10 million in the matter of weeks that we needed. And that's really when the whole idea came about, of sophisticated investors working together to have collective buying power. And so we then embarked, and I met with Henny and a gentleman by the name of Peter Fenstra, also a very sophisticated investor based out of Victoria. And we went on a number of times to Australia and started investing over there, mainly in residential development opportunities and also in commercial. But it was in April last year that Brendan and I went over, which was our first trip to America. Now, we've been multiple times, but this was the time we got excited with regards to Wealth Migrate. And I'll never forget it. It was actually from Times Square that I phoned Henny. And the conversation went something along the lines of, Henny, I think we're in the wrong country. We need to be in America. And so Henny came over with Brendan and I in August last year, and we introduced him to all our different partners. And it was very interesting on that trip. Of every single person he met, Henny was like, John's our guy. We need to be working with that guy. And we'll go into that in more detail. Brendan and I went back in October, and then in February this year without Henny, to continue doing the due diligence, to be working with the partners, to be really getting the runs on the board in terms of what was happening. But as you might have noticed, we only got the tax and everything finalized by Grant Thornton in April. So from May, we literally started to get aggressive in terms of purchasing stuff. John started actively looking at stuff, and we really started getting into the market. And so in May, Bainant and myself and Henny and Brendan went over, we met with John and all the different partners over there, and we looked at a whole lot of opportunities. And then we went back now in July, and again, John had lined up with all the partners on the ground a huge amount of opportunities, and that's what he's going to go through today. You must understand that what John shows you today, we've looked at 17 different cities. Okay. Not only have we vetted the partners, but we've vetted the cities. We've vetted the fundamentals of the partners. We've vetted whether they're best of breed, whether they can deliver, whether we want to do business with them. Henny's got a great saying in business. He says he only likes to work with people that he has fun with and that he wants to work with. And it's great. It's one of our philosophies. So we've whittled it down. And what John's going to show you today, you mustn't underestimate the amount of siphoning that we've gone through, not just in areas, but also in partners and opportunities to get to where we are. And I think, just to remind you of our 10 wealth create paradigms, the first one is that we only invest based on income value. We're not interested in in these ShareMax type deals where we come up with fictitious values based on capital growth. The value is based on income and the returns based on it. And even if we buy on the growth plan, we still want to make sure that there's a net return, there's an exit strategy. We know what we can do if the property can't be sold. We also visit each market personally. As you can see, if you want, we've got loads of pictures of myself and Brendan and Henny and Baynant and all the buyers that have been over and the different partners in terms of meeting the best of breed partners so that we can pass on. And our partners have a 15-point test that we go through to make sure that they actually pass the test with regards to our experience. We all invest personally from the investment committee, and all 3 investment committee members have to agree to make sure that an investment goes ahead. The best of breed partner also needs to be invested. We're not interested in this, what happens often in Australia, where they like, yeah, listen, you bring all the money and we've got the idea and we'll get 50% of the upside but none of the downside. That makes no sense to us. As Henny always says, it's like the chicken and the pig at breakfast. The one is committed and what's the other one? The one is committed and the one is just enjoying it. So what's the between the two? But we really want people that are all in and are in the same position as us, but from a risk perspective. And then from an income perspective, it's very, very important for us to make sure that all the fundamentals are passed so that we can make sure that there is rental demand and it's not just fictitious numbers. From a growth perspective, we only invest if there's a unique angle, if there's a refurbishment, a motivated seller, or an opportunity where we can create tremendous value straight away. So we don't need to rely on the market. We can use our own experience to create value.
But I've got a question from Alan.
Yep.
Have we bought anything in America this month? So I just wanted to maybe mention that part of the whole briefing session tonight is to show people what we currently have under contract.
Yeah, 100%. Alan, great question. We've currently got about 170 properties in America under contract. We've got 2 commercial opportunities in final due diligence, and we've also got 2 development projects, which John is going to take us through. So I'm nearly done, and I'm going to be handing over to John. In terms of the weekly updates and transparency, Brendan is actually building an IT platform for us so we can constantly be updating people in terms of where we are. The returns are external in terms of the valuations. It's only on actual sales numbers. We're not interested in fictitious numbers in terms of what's happened. And most importantly, it's all about creating global wealth, because that's what people are here to do. It's not, we know that people can make great returns in terms of rand. So some of the areas we've looked at, New York, I really like New York in terms of the opportunity. I've done really well in London. And the reason being is that it's got great fundamentals, and most importantly, there can't be an oversupply, because to build it, to create something new, you've got to knock something down. There was a project that I've taken a lot of people to look at it. This here is the World Trade Center. It's literally 3 stops in Journal Square. This was the building here. It was about a 14% net return. We could get financing on it. One thing at the moment with regards to New York is that they're a lot more tenant friendly, and so we are working with the partners there. We are looking for bespoke opportunities. It's a great long-term play with regards to the income plan. In terms of Orlando, we looked at an apartment complex there. We did a huge amount of due diligence. There's 192 units that we could buy it. We could buy them at a door value of about $40,000 a door. The current market value is about 75. I think, Brendan, the net yield on that was about 12%, 12.5%. And again, we could hold half of it and sell off half of it into the local market. The only reason that we didn't go ahead with that one was that we went back and forth with the bank, and although $14 million was outstanding to the bank, we could make the project work at about $7.5 million, and they were sticking around the $9 million mark, and so we couldn't get to some sort of finality there. Atlanta, we've done a huge amount, and John's going to go through in terms of Atlanta. We originally started off wanting to buy houses and renovate and sell them, but the problem is the big funds have come in. Guys like Blackstone and Colony Capital have bought, Blackstone alone has bought 29,000 homes in the last 12 months, literally billions of dollars. And even though, our couple of $1 million sounds exciting, it's really nothing in comparison to the size. And so the one thing we've learned in America is you've got to stay fluid, and that's why having a guy like John is so important, so that you can adapt with regards to the market. Oklahoma is a new market that we've just gone to check out, and John's going to go through that in detail. But there's a huge amount of opportunity there that we really, really like. And then the last one was North Dakota. And I don't, John and I can talk about it a little bit, but, that's actually John there and myself and Henny, and the first time I think I've ever seen a proper oil well. But we'll go through a little bit about the sustainability and the commercial projects that we've got there. So in conclusion, I want to ask, and some of you have seen some of the presentations we've done, but how does Warren Buffett actually invest? How does he ensure when he invests in either a building or in a company. Does anyone know his strategy for investing? Anyone coming up there? Is everyone asleep? Jeez, guys, we're sharing with you the game changer. That's the way that property is going to be revolutionized forever. And so just tell me if anyone knows in terms of how Warren Buffett does it, because I think it's very important that you at least try and apply your mind here. So has anyone got an idea there, Brendan? No one else obviously is going to be Marco gets the right answer. I hope Marco $1. So Marco got it right. Basically what Marco does, Marco said, is that Warren Buffett actually pays people to tell him what the problems are with the project. So he pays someone, and if they can persuade him not to do a deal, then he pays them. And John's got a great saying. He says, compensation drives behavior. So if you're asking someone that's incentivized to do a deal, whether it's a good deal or not, obviously they're going to tell you it's a good deal. But if you're paying someone and they're only going to get paid if they can persuade you not to do the deal, then that's fantastic. And the great thing with that whole philosophy is that, no matter which deal you do, there are pros and cons. And if you understand all the cons, you can decide whether or not you actually still want to go ahead. And I find it absolutely incredible how the universe works. Because when we were there in August last year, Penny met all the partners in America, and he said, John's our guy. John is our guy on the ground that needs to be able to do what Warren Buffett does in terms of making sure that we make the right investments. And it was really, really uncanny for me when we chatted to John, and he said, well, you won't believe it, but I've actually got a website, and it's called Deal Kill. And, it's basically, if I can't kill it, invest. And so without further ado, it's a huge honor and a privilege to welcome John. John is, he's coming all the way from Orlando tonight. We've spent a huge amount of time with John, both in South Africa in March and then on all the trips over there in America. And I'm sure anyone that's met him personally at the extravaganza would agree that he's very methodical. He's all about the numbers. He's all about the fundamentals. He's cool, calm, and collected. And that's exactly what we want as a partner on the ground there, looking after our assets, looking after our money, sweating our equity in terms of what we're doing. And really, without further ado, I'd like to hand over to John, who's actually going to take us through some of the opportunities that we currently have under final contract, final due diligence in terms of where we actually are. So, John, over to you.
Thanks, Scott. Wanted to say hi to everybody in South Africa. I'm really looking forward to coming back. I don't know, Scott. I don't think you mentioned, Scott. I'm back September 1st through the 15th. So I'm looking forward to hopefully meeting with all of you. I am going to pull up my screen here. I don't know which you can see. I've got a split screen. Are you seeing Joe on the screen there, Scott, or are you seeing the Wealth Migrate slide?
No, at the moment okay, yeah, there we're seeing Joe basically, yeah.
Okay, let me pull up the Wealth Migrate. How about now?
Okay, we've got the Wealth Migrate PowerPoint. Yep, perfect.
Okay, excellent. All right, so before I get started, so that I make sure I cover everything that you want to hear, is there anything in particular that maybe Scott hasn't covered already that you want me to maybe touch on aside from what I'm going to be talking about, which is the actual assets on the ground here? I'm going to be going over the different projects that we have in play, a high-level overview of them. But if there's anything that you want me to cover specifically, go ahead and use the questions panel on your GoToMeeting control panel and put those in, and I'll make sure that I try to cover that for you. So what I'm going to talk about is
if you can, John, if you can just keep going, and please, guys, the more interactive this is not supposed to be a presentation. We're a bunch of like-minded, sophisticated investors who are looking to invest together. The more questions you ask, there is no such thing as a stupid question. The more questions you ask, the more value you'll add, not only to yourself but to others. So please fire away and ask questions. And this is now when we're getting into the nuts and bolts. And really, we've done a huge amount of research. And to be honest, if you ask a question we don't know the answer to, then we'll find the answers. But really, we don't have enough time tonight to go into everything in as much detail as we would like to. So ask the questions and we can get them answered for you.
Okay, so I'm just going to go into a quick overview of each project to kind of reiterate what Scott was saying. When we're looking at projects from a high level, there's just a few things that I'm focusing on. One is sustainable macro fundamentals. There was a story I had when I used to do some day trading. One of my mentors in day trading I had a program that I had figured out. It was an algorithm, kind of like a logic test that worked 9 times out of 10. And so I asked him what he thought of this program, and he said, "Well, test it on May 22nd," which on May 22nd was at the very peak of the market, and then had dropped it after that. This was back in 2001. And so when I tested it on May 22nd, I had a failure rate of about 8 times out of 10. So I say that point because you can be doing all the right things, but do it at the wrong time or in the wrong place, and none of your rules work. So when we're looking at investing in real estate from a macro perspective, we've got to find the macro markets where in the country where we know that we can follow the micro rules that we've set for ourselves to invest in the right things with the good growth, the high safety, and the good income. And so that's there up first and foremost. So we've got to find those pockets within the market that have those really strong fundamentals, that have good job growth, that have good population growth, just sound fundamentals. The next thing we're looking for, like Scott said, is to, like, again, we can't emphasize this enough, because what we do more as a people business is less, it's actually a lot less sticks and bricks as far as what I do anyway, when we're putting these deals together. It's all about how to identify, attract, and keep the very best partners, not much different than what we do with our businesses, is attracting those type of people. And we can only attract those people when we're tens ourselves, and when we ask the really tough questions. Really, the talent in killing deals is more about the quality of the questions we're asking, as opposed to having all the right answers. Then once we find those macro markets, we have the right team and the right people on the bus, we're trying to find the best micro opportunities in that market. So when we're looking for those micro opportunities, we're looking for opportunities where those bottlenecks are, where are the holes in the market. So just because we're successful developing houses and selling those houses in Atlanta, as an example, that may not be the best place in Oklahoma City or in North Dakota. So we aren't just going to assume that one product set is going to be the best investment and achieve the highest ROI where we're playing. And then the final point, again, Scott touched on it, is we want to add value. So the ROI comes when we're adding value to a property, when we're stabilizing an office complex, or we're increasing the occupancies, we're increasing the NOI on a property, or we're developing it from the ground, or we're doing some of the horizontal work on the land. That's when we find equity. It's not when we're buying a stabilized unit. I had one of our agents put in front of me an opportunity to come into the second floor of a building, but we would buy based on the already added value stabilized building. So we were going to buy it at a 12 capitalization rate, and we were just going to walk right into that property, and then there was really no opportunity for us to add value for a really good equity position in the future. So we're trying to find plays, because we have the sophisticated partners on the ground, we have the resources, and we have the capital, we can come in with a little bit more power than most people that are trying to play in these respective markets, and add value that way. And that's really kind of, from a macro perspective, generally what we're looking for. And like Scott said, I'm the one on the ground here that is trying to kill everything that we do. So what you're about to see is, first of all, sub-markets in the United States that pass all the different filters where we had the good partners on the ground. But then even within those sub-markets, you're only going to see the creme de la creme of the properties that have passed a lot of the tests. So what you're not seeing tonight is about 90–95% of the properties that have not passed our litmus tests. Either in a very early stage we killed them, or we got pretty far with them, and there was recently a couple projects that we had to kill in the due diligence window when our deposits were already in hand, and so forth. And there could be even one or two tonight that, if the due diligence doesn't prove right, that we would kill those too. So I kind of say all of this just to frame what you're about to see. So without any further delay, let me kind of go into some of these projects. Okay, so just an overview. Here's kind of a map of a mind map of what we have in the United States. You have basically three categories of assets. We have Oklahoma City, we have Bakken, North Dakota, the Bakken oil play in North Dakota, and then we have Atlanta, Georgia. And I'll touch on the why from a high level, why we are in each one of those markets. And then within that market, again, going back to that hole, where's the hole in that market where we can add value and create a good return for our investors. We're going to start off with the ones that are a little bit further out. So one of the considerations that we have when we're coming into these markets is how do we create opportunities not just in the next 60 days or 90 days or 6 months where we get our return this year, but we're asking what can we put in play now to fill the pipeline for deal flow so that we have opportunities that are constantly coming up that we're working in the pipeline 2 years, 3 years from now. And Oklahoma City is one of the ones that's further out because it requires us to buy raw land, develop the raw land, rezone the raw land, then go vertical with it, and then exit. So we're going to start with Oklahoma City, then we'll go into Bakken, North Dakota, and then we're going to go into Atlanta. So in Oklahoma City, if you're not familiar with the geography in the United States, where Oklahoma City is, Oklahoma is kind of like a small Texas. It's one of the 5 major states in the oil country. The 5 big states in oil are Texas, Oklahoma, North Dakota now, Colorado, and New Mexico. And Oklahoma is one of the bigger ones out there. A lot of the big oil companies are based in Oklahoma City. That's where we're playing specifically in Oklahoma. And within that city, we are only playing in the very high-end pocket of the city with the absolute best school districts, some of the best demographics. You have some of the highest rents and lowest vacancy rates. And one thing about Oklahoma, if you're not familiar with Oklahoma City, where we're going to be playing, Oklahoma City, actually I'm going to let Joe tell you because Joe was kind enough, he's our partner on the ground in Oklahoma, he was kind enough to record a YouTube video. So I'm going to try to play that. The video may be a little bit jerky, but at least you'll kind of see him, you'll get to see Joe talking, our partner on the ground. But he's going to give you kind of the macro perspective.
John, just before we give Joe, just explain quickly who Joe is and his experience and how influential he is on the ground there.
Yeah, Joe, just to give you an idea who Joe is, to give him a proper introduction, he is a real estate broker in Oklahoma City, the state of Oklahoma. He is actually the president of the Oklahoma Realtor Association, which is a pretty big honor. So he's about the most blue chip person we have on the team as far as that goes when it comes to that formality in the real estate circles of the United States. He's also a board member on the National Association of Realtors. So Joe will spend about a month to 2 months of his year traveling the country, fixing problems for the real estate industry in general, working on tax issues, providing input for lobbyists in Washington, D.C. He's pretty well known, and he's well connected nationally and locally. But he has about 24 years experience doing this, and he only works with investors with commercial and residential properties. So he's the one that is spearheading a lot of our efforts in Oklahoma City and putting us in front of the best of breed builders, developers, engineers, everybody that's involved in putting the deals together in Oklahoma City. So I'm going to put his audio on right now, and at the least you'll hear his audio, hopefully, and you may see a little bit of jerkiness with his video, but I'm going to try to put this on. This is the first time I've done this, so Scott, let me know if the audio is coming through, okay?
Yeah.
Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. And I want to say thank you for listening in. It's great to talk to people from South Africa.
John, it's very light, eh?
Talk about our market here, which we're very proud of. You can hear that?
John?
Yep.
No, it's very light. What I'd suggest is I'll send an email after the webinar with a link to the YouTube video, and everyone can watch your greetings from Joe, because it's coming through very lightly. I can hardly hear it.
Okay, gotcha. All right, so we'll let you. We'll send that link over to you then. So that's a little bit about Joe, but he's the one that's pretty much running everything in Oklahoma City now. the opportunity in Oklahoma City, let me give you a little bit of some context in Oklahoma City. Oklahoma City is, as far as macro fundamentals go, it's 2008, at the peak of our credit crisis, Forbes magazine ranked it as the most resilient, economically resilient city in
Dude, we just need to change your, sorry mate, we just need to change your slides back to the PowerPoint.
Okay. You see it there?
No, I'm still on Joe.
Okay, Joe is, are you on the Joe slide or are you on the Joe?
No, the Joe YouTube video.
Oh, okay. I don't know why that's happening. Let me try this. All right, how about now, Scott?
No, I've still got, I don't know if anyone else has got it changed, but I'm still on the same
Is
slide.
everybody, if you could, apologize for the technical difficulty with this swap here, but if you could, just put in your questions there. If you can see the PowerPoint slide, if you're still seeing, I guess it must have freezed the frame on my screen then through the internet connection. Try this, Scott.
Yeah, everyone's still got Joe and the video, looks like.
Okay, so why don't we do this? Show your screen, then switch it back to my screen, and I'm going to keep talking while you're doing that, okay? And then it should come back.
Yeah,
I think it just needs to reset what's on my screen. So anyway, the Oklahoma City market, what we like about the Oklahoma City market, I've been watching the market for about a year, and the reason I found it was because I was doing a lot of research. As most of you know, if you know me, I've been working in Atlanta, a very economically strong market in the United States. How about that, Scott?
Hang on. Yep, perfect. Okay.
All right, you there? Okay, so
Yeah.
I had been researching Atlanta. Atlanta had some really good fundamentals as far as growth in migration within the United States. You had one of the strongest GDPs per capita in the U.S., and the jobless rate was dropping. But as I was doing the research on Atlanta, this other city, Oklahoma City, not very glamorous city, but it kept coming up on my radar. Now, when I was in the Air Force, I was stationed in Oklahoma, so I'm familiar with the city from about 15, 20 years ago. But when I was doing the research for Atlanta, the fundamentals for Oklahoma City kept coming up side by side with Atlanta, from, again, GDP growth to unemployment. Unemployment in Oklahoma City, for those of you that don't know, has the lowest unemployment rate of any metro statistic area in the United States with a population of over 1 million people. So Oklahoma City's economics are very strong. Their vacancy rates are lower than anywhere else. So we have in that market, you've also got a very friendly landlord state. In Oklahoma City, it's probably the easiest state of any state that I've played in where we can evict tenants that don't pay. So it's a very easy state to do residential investments. So that's kind of where we're going to be focusing on in Oklahoma City. The hole in Oklahoma City was in an area called Edmond. If you research Oklahoma City, you'll find that Edmond, one of the suburbs of Oak City, is got the best school districts, lowest crime rates, lowest vacancies, highest incomes. The problem with Edmond, because it's such a high-end part of town, is the entry barrier for families moving into the Edmond area. Houses start at about $170,000, and they don't have very much. They don't have any new multifamily product there or townhomes. So they know that there is this need in the market, especially in Edmond and some of the surrounding areas around those good school districts, to deliver a high-density product like townhomes where someone can buy it for $120,000. So that's the product that we're focusing on. This one happens to be just a rendering of the product that we're working with the builder on to deliver in Oklahoma City. We're in the process of securing a 4-acre parcel. Maybe two. Oh yeah, I'm sorry. Go ahead.
two questions. One is, what are the main economic drivers that are driving Oklahoma?
The main industry in Oklahoma is oil is one of the big ones. You have Continental Oil, you have Chesapeake Oil and Devon Oil, some of the three biggest oil companies in the United States and in the world, actually headquartered in Oklahoma City. Behind that, you have medical. Mercy Hospital is the largest medical or the hospital company in the United States. They have a huge presence and one of the biggest employers in Oklahoma City. And then you have agricultural and IT behind that. So that's the big industries in Oak City. But the biggest one, which Oklahoma City is well known for, is oil. And between the oil that you're going to hear about in today, you're going to hear oil in two different places. You're going to hear about oil indirectly in Oklahoma City, more of a conservative oil town. Oklahoma City, the personality of it is very, very, very safe and conservative. So you have very conservative rents. You don't have the volatility in Oklahoma City with the real estate market that you've had in other locations. In other areas in the United States, when you had a 30 to 40% default rate on loans back in the peak of our credit crisis, Oklahoma City was only at about a 5% default rate. So your cost of construction is a little bit higher there because the values are a little bit higher. They hold their own very well, and it's because the incomes in Oklahoma City, there's two ways to measure how affordable properties are. When you have very high incomes and the property prices are low relative to those incomes, you have a very sustainable price market. If you go to markets where the incomes are low and the property values are low, there's a very strong argument that you don't have the incomes locally to sustain those values, or at least don't have the growth potential. So now I'm going to go into the actual project, and then this thing keeps telling me to show my screen, Scott. Is there switching going on there?
Yeah, dude, I'm trying to do it because we still, I mean, we've just got a blank screen at the moment. So I've been trying to see if it would, I don't know what's happening from your side.
Let's try this.
At the moment we're seeing a black screen.
Again.
Gentlemen, this is Patrick. I've just dialed in, but I do not have computer access right now.
Hey, no problem, Patrick. We're going to get to you in just a few minutes, all right?
Okay, great.
All right. So, Scott, what I did was I unplugged I unplugged one of my split screens. How about now?
Okay, so we've got the local partner with Joe Pryor. Do you want to try and change slides and see if it changes?
Yeah. I'm actually on the site map of the Oklahoma City townhomes.
Yeah, dude, I don't know what your machine's doing. We've stuck on.
You know what? Let me try that.
I can see the site plan on the left-hand side. Just while you're trying to get that sorted, I want to answer some of the questions. Michael's asked, is there land to develop? Yes, very much so, Michael. The opportunity in Oklahoma, and I'm sure John's probably going to get to it, but at the moment the banks are financing developers to build house and land, or what we in South Africa will call plot and plan. They also are financing apartments to be built, but what they're not financing is townhomes. And there's a huge opportunity, like there was in Australia, from an affordability perspective. And I know it's not a good word in South Africa, but it's cash housing. It's good area, small home. It's good quality properties in good areas, which are more affordable, and it's townhomes in bundles of four townhomes in one complex. And we've actually got a developer there with a huge amount of experience, and John will go into that. And what we're looking for is exactly what was very successful for us in Australia, where we work with a guy on the ground who's got the experience, and we bring the capital to unlock the opportunity, and then we provide ourselves a pipeline over the next 5 years to be able to deliver. Yeah?
One of the questions that feed into that is does the contractor guarantee cost, and what is the cost experience?
Okay, John, there's a good question here from Alan. He said, on the development investments, does the contractor guarantee costs, and what is the past experience on cost overruns by the contractor? Are contract prices fixed?
Are the contract prices fixed? You mean when we lock in with the builder?
Yeah, 100%. So, I mean, like as an example, in Oklahoma, we would be partnering with the developer builder, where they would be responsible for the construction. What type of assurances are there with regards to cost overruns and fixed price contracts?
Well, on that note, let me talk. That's a really good question. Let me talk about that a little bit. First of all, the way the deal is structured, and the deal is different in every location that we're in, but in the deal there is Wealth Migrate. We're doing a joint venture with the builder, so it's not simply just bringing somebody in who isn't personally involved with the project. So there's already an inherent accountability for that. And so he's coming in as a 49% partner, we're 51%, and that builder, who is probably one of the top 5 builders in Oklahoma City that deals with high-end product, he already knows that we bid the work out. So contractually, there is performance in our agreement with him. There'll be performance requirements where he has to meet certain costs, forecast costs, but he also knows that we are bidding out together, him as the builder or the person managing the construction, and then us as the capital partner. Together, we bid out all of the contract work. So, in other words, none of that is just given to one subcontractor. We bid it out to multiples, but we give our partner first and last look to secure that contract. I don't know if that answered your question, but aside from
Alan, if you can let us know if that answers. I know Henny's online, and I'm not sure if Henny can let us know if he's got a audio available. But I'd quite like it if Henny could just let us know how we did it, from his experience, how we've done it to try and manage the risk and make sure that our partner on the ground is accountable. So, Henny, I'm not sure, I'm putting you on the spot a little bit there, but I know that this is a huge amount of your experience and very much a model that's worked for us overseas before in terms of partnering with people and getting them to have a position and not just be a contractor to us.
Yes, Scott, I'm not sure where you can hear me, but the contract...
Yeah, we got you clearly.
Yeah, the contract will be drawn up in such a way that it's a fixed, price for the construction, and if there's an overrun, he'll be responsible for that. We've got a fixed contract, and you must deliver within that contract.
Then, just from your perspective, I mean, in terms of the model that works so successfully in Australia, it's really about partnering with people and getting them, you've got that great saying I said a little bit earlier about the chicken and the egg. But just tell us your philosophy in terms of wanting to partner with people on the ground and making sure that they're part of the deal and that we limit the costs on the front end and that people benefit on the back end.
Yeah, well, there's a couple of principles that we've learned in Australia that is critical in terms of our success. One is that we need a partner that's reliable, but also that puts some, his money where his mouth is in terms of being involved in the project, but also invest capital with us. I think that is critical because it's impossible to sit in South Africa and try to manage it in another country. So that's very important that they're involved and that we agree upfront with them that everything will be done at cost or a cost plus a small margin, but we all share at the back end on exit, and we all make, we align our interests so that we all share the profit at the end. And I think that has been very, very successful with our efforts in Australia over the last 5 years.
Excellent, Eddie. No, thanks very much. I mean, look, if anyone's got questions, we can go through that. I am conscious of the time, and I do want John to run through a couple of the opportunities so people can see them. So sorry, thanks, Eddie. Back to you, John, if you wouldn't mind telling us a little bit about Edmund and the opportunity with the townhomes.
Yeah, definitely. Can you see the site map on my screen now?
Yeah, dude, we finally got you. I know that you're in America and that you guys battle with internet and IT over there, but us Africans will help you out.
Now, I'm wondering if it's through your connection, but anyway, so it looks like we're back on track. So in Oklahoma City, what we're looking at right now, there's 2 pieces of land in Edmond, strategically located, that we can put about 20 of these buildings. Each building has about 4 townhome units in it. So if you're not familiar with the language I'm using, townhomes are essentially single-family homes that are attached, and you build them horizontally.
Townhouses. We call them townhouses, John.
Okay, good. All right. So we're basically building blocks of townhouses, 5 to a block. You'll see on this image here, there's a couple blocks with 3 units each, but the ratio we're going to be building is 4 units per block, and there are going to be 4 blocks or buildings per 1 acre piece. So when we're looking at a 4-acre parcel of land, we perform that with 80 units, 20 per acre. So to give you an idea what the interiors are going to look like, this is an example of one of the builders, our JV partner on the ground in Oklahoma City. This is an example of some of the finishes he has in one of his single-family homes that he is building in the #1 school district in Oklahoma City, Deer Creek. But this is actually not going to be as contemporary a product because the hole we're filling there in Edmond is a product that what we call your Generation Y, your younger professional it's going to appeal to that buyer. And we're looking at exit prices on these at about $118,000, $120,000, with rents between about $1,000 to $1,100 a month. I mention that because that plays into our exit strategy later, where we may peel off some of these units as investment properties to retail buyers. We also have the local buyers that it'll appeal to as well. But I'm just going to run through a couple of these just to show you some of the finishes with this local builder in a similar product, but this was a detached single-family home. This builder does things a little bit more contemporary than most builders in the area. It's one of the things that appealed to us with this particular builder, and he's going to be doing very similar finishes in his townhomes, but as you saw on that elevation picture in the beginning, it'd be a little bit more contemporary than even what you see here. I don't know, Scott, I know that we're running, I don't want to spend a lot of time. I could probably spend about 20 minutes on this, on the financials, the high-level financials, but I think let me just give you the abbreviated version. If we're looking at a land cost of about $200,000.
I think the purpose, John, is give the abbreviated. I mean, tonight is effectively an overview, and then if people want to go into more detail, then we'll be able to go through that basically.
Okay, gotcha. Well, this particular project works because we're going to get about 50% leverage on our construction costs. In doing so, we're going to be essentially rolling about $1 million to $1.5 million, building 5 units at a time. Each building takes about a month to build. So once all of our horizontal work is done, then we're starting to erect each building month after month after month, and it takes 5 months to do a building. So essentially, every 5 months, we're completing 1 acre of the 4-acre parcel. So we're looking at a total time frame of about 3.5 years, where we're going to have about $1.5 million rolling in that 3.5 years, erecting these buildings with an exit strategy locally to the retail buyer and to individual investors who want individual units. But we have right there about a 22-23% annualized return on our cash over the course of that 3-year window. And we'll go into more specifics with this when I'm actually in South Africa, or if you're interested, we can get you the numbers on these. But we're in talks right now with the builder to put this on a time schedule right now. That's kind of where we are with it, and we are in the process of tying up those properties so that we can start our heavy due diligence on the ground.
And I think, John, the whole idea here is that one of the things that's incredibly important for Wealth Migrate going forward is that we want to be able to do stuff that we can scale. So we want to do stuff, and the beauty with this project is that we want to secure plots of land where we can do this, over and over again. We don't have competition in the market. Once it's successful, there will be competition coming in. So the idea is to land bank a number of opportunities so that we actually provide ourselves with a 5-year supply line in terms of bringing good product to the market in affordable price ranges. So just in terms of letting people know, it's not necessarily a one-off. In all our projects, we're not interested in trying to just do one-off deals. We want to get scalable. We want to learn from the experience and ultimately be able to scale it long term.
Yeah, and to that point, Scott, the reason that this is important that we're going to be first to market with this type of product. It's important because the reason we have this opportunity to begin with as a capital partner with this deal is because there is no financing for this type of product for builders. So you have a lot of builders that were out of work for the last probably 4 years when the market was correcting itself. And a lot of the small builders got pushed out of the market. They can't come back into the market right now in Oklahoma City because there's no land to buy and they don't have capital. The big builders, the national builders and the regional builders are coming in and tying up all the big land, but they don't have an interest or can't monetize. Their system doesn't work on 1 acre to 4 acre pieces. So we have this unique opportunity to be first to market with a higher density, lower price product in this high-end area of, and not just Edmond, but in the other areas like Yukon and in Piedmont and in Mustang. Those are other higher end areas in Oklahoma City. To Scott's point, we can scale this, but once we've done one project, then what's going to happen is the appraisals will be established for other builders, small builders, to get the financing, and that's why it's so critical for us to tie up as much of the strategic land pieces that we can do to have deal flow over the next 3, 4, 5, 6, 7, 8 years. And we can continue to deliver a model like this in some of the best pieces of land. If we determine that we want to take a different direction, well, then we have land that we had purchased before those appraisals came in, and the value of the land is going to go up because we've actually delivered a product like this, and now the appraisals are set. The appraisals aren't there right now for a product like this because Oklahoma City doesn't have any. And that's why the builders aren't delivering it, and that's where the opportunity is for us.
I think one last thing, John, that's very important. So Brendan's just got the speaker on. One last thing that's very important there as well is that what works so successfully in Australia is where you build it and you sell off half so that you can recapitalize, and the second half you rent out and you keep long term, which creates the passive income and ultimately the long term hold on 50% of the building. So that's just it's an important strategy that's worked very successfully in Australia that we want to emulate in America.
All right, so we can answer more questions about Oklahoma City a little bit later on, but that's a quick overview of what's happening in Oklahoma City. I'll give you more of an update on that as things progress.
Sorry, John, just a very quick one. It's a good question from Alan. He said, why do the banks not finance and we are then taking the risk that the banks are not willing to look at?
There is no risk. The risk that the banks saw in it is that they didn't see any other product like this out there. It's a really good question. It wasn't really the risk from the bank. It was that the appraiser who was doing the appraisals for the builder to deliver this product didn't have anything to appraise this type of product against. And so when the appraiser was trying to find a similar product, they defaulted to an apartment building or a condo building that was built in the 80s with it was a condo, first of all. It wasn't even townhomes. Condos can't get financed in most cases by end buyers, and townhomes can. So it's a completely different product in that regard. And the appraisals came back at about 50% because, or only offering the builder 50% loan to value. And he had better ways to use his money than that. And that's why it didn't work. But that's a great question. It wasn't so much the risk. It was because there was no other like product, and appraisals, they didn't have anything to do the appraisals on.
And Barry's asked, are these tracts of land zoned for this project?
I'm sorry?
Are these, is this land zoned? Does it have the right zoning to be able to do this type of opportunity?
No, it's not right now. It's zoned something similar, and we wouldn't commit to the project unless we could rezone it, obviously. So we're not committed to the land unless we can rezone it. And with this particular project, or these two land pieces that we're going to be securing, we're going to be doing the rezoning process or working with the city for the rezoning in the due diligence process, not after we've purchased it, so there's no risk. Okay, but perfect. It's not zoned any different than what this builder is used to rezoning. And there's residential around this area, so both of these parcels butt up against residential neighborhoods, so it shouldn't be a problem getting it rezoned.
But again, it's subject to, we're not buying the land and doing it on risk. We're doing it prior to effectively getting an option on the land prior to doing the zoning.
Exactly. And
let's look at Buchan. Let's move on. I think it's important just to run through the three major options, and then for those that want to stay online afterwards, we can stay on as long as possible, asking any questions.
Okay, sounds good. Do we have Patrick on the line? Okay, so I'll fill in for Patrick.
We've lost Patrick.
I'll fill in for Patrick here if we need to. So the Bakken oil play, this is a pretty interesting play here. The Bakken oil region I've been watching for a few years, and frankly, it was really, and I tell everybody this, if I was 20 years old and single, I would have already moved to Bakken and rooted myself in that community and become a millionaire, hopefully in probably the next few years, or maybe I've already become one. The Bakken oil play at first felt a little bit like a gold rush. There was a lot of speculation for people who didn't know oil, and that's one thing that we want to emphasize, that you have to understand oil and the importance of oil. And if you follow global economics and so forth, and then you'll know that the driver of the American economy, American agriculture, our financial system, everything is driven by oil. And it is so critical that it's always part of our political agenda. Every time a president's brought into their campaign is always about how to become independent, energy independent. And that's why the Bakken oil play is so important for us. And because of the Bakken oil region, if you're not familiar with it, all you have to do is Google Bakken oil, and there's so much information out there about it. And our partner on the ground, Patrick, is a walking encyclopedia when it comes to the oil up there. But the Bakken oil play is going to help us become oil independent by the year 2017. They say that by 2018 at the latest. That's where we're trending right now. And we will be the largest net exporter of oil because of Bakken by the year 2025 is what they're saying. So this is a huge development. But just like the gold rush in the 40s, the 1840s, we saw that the people who made all the money weren't the ones digging for gold. It was the ones selling the shovels. So when we're going into the Bakken region as real estate players, we're trying to find what those real estate shovels are. Where are the real estate opportunities in the Bakken region? Now, let me frame the talk about Bakken very quickly. When we were in the Bakken oil region, everybody was playing with residential. Typically, if what you do in real estate is build houses, then if you're going to play in the Bakken oil region, you're going to be building houses or something close to that. And so for the last probably year and a half, 2 years.
To be honest, John, even those like man camp things that I showed earlier, which are just basically cardboard huts.
Yeah, they have, there's 4 types of residential product that you can build, from high density all the way down to the low density detached single family homes. And what we found in the Bakken oil play, you might have heard Scott talk about it with that other promotional piece. When about 3 years ago, when the Walmart parking lot there was a 2-hour waiting line to just park in the Walmart parking lot to sleep in your car. They had police guarding the front of it, and you had people that just had nowhere to sleep. You had a rush of developers coming in and building the high density, what they call workforce lodging or man camps. And those are basically just hotel boxes, very cheaply built. And they were renting those out to companies and to oil workers for ridiculous amounts. So you could have, for example, a trailer, something that looked like a single wide trailer that was 5 rooms long, 5 doors attached to it, and each room was a makeshift hotel room, and you were renting that out for about $1,200 to $1,500 per bed, or in that particular case, about $7,500 per month on a structure that probably costs about $150,000 to build. So the cap rates were ridiculous. But what has happened over time is that now that things are becoming, things are still crazy in this region, but over time, what you're finding is that things are starting to at least somewhat stabilize. You don't have the housing crunch that you had 2 years ago. So there has been a correction of supply with that type of product. And you are now seeing a shift with an emphasis for companies and the city to have people locally stay. In that market, as you can see on the map here, you're far north, you're almost at the Canadian border, but all of this is taking place in North Dakota. And a lot of the families that work in oil.
Just for the record, us South Africans don't understand this, but it's like minus 40 degrees there in winter. The frost is like 8 feet deep literally in the ground. It's like 8 feet deep, the frost. So it's not exactly pleasant living conditions either. It's windy, it's flat, it's cold, and it's horrible.
Yeah, it's not a really fun place to be, and that's why you have oil workers. They come into that. First of all, you can't, from a real estate perspective, it's very hard to build in the cold months. So you have to work around the season there, the cold season. But with the oil industry in general, you don't have workers that stay permanently. What they do is they go up there and they work for about 2 weeks on, 3 weeks on, 4 weeks on, and they go back to their families for a week, and then they go back again. And so you have all these workers that are kind of transient, and a lot of them are up there. And just to kind of let you know who's playing in the Bakken oil region, you have about half of the 19 biggest companies in the world, which are oil or energy companies, half of them are playing directly or indirectly in the Bakken oil region. We talked about Warren Buffett. You want to talk about a shovel business. I was researching stocks to invest in around the direct oil play, and I was researching pipeline companies, and found that pipeline companies aren't a good investment in the Bakken oil region because there were long-term contracts for trains to bring the oil in and out of the region. And then guess who owned one of those train companies? It was Warren Buffett's fund, Berkshire Hathaway. Berkshire Hathaway dropped about $47 billion on the Bakken oil play indirectly through the train system that's bringing the oil in and out of the region. So Warren Buffett is playing in the Bakken oil region as well. So going back to what I started saying, that I'd been watching the market for about 3 or 4 years, and it wasn't until recently that we wanted to go in there. But when we went to the region there, we started looking at the different real estate opportunities on delivering residential housing. We found that because of the local shift from local companies wanting more permanent employees, they want families to build their lives there. They want people to settle in. The city wants communities to be built. You're starting to see now an emphasis on the lower residential type products, so townhomes and single-family homes as opposed to the temporary type lodging. And because of that, we're now 2-3 years into that cycle of watching the high density stuff kind of phase in and out. And we know that in 2 to 3 years, you're going to see probably the same thing with the lower density residential as well, the single family and townhomes and duplexes. So we stumbled upon an opportunity in Bakken, North Dakota that has a lot longer shelf life, a lot less risk for investors, and potentially a lot higher returns. And that's going to be on office. So I'm going to talk about that here in a couple seconds, but as you can see here in Watford City and Williston, North Dakota, Watford City, where you see on the screen on the top left there, Williams County and McKenzie County are where most of the oil production is going to be. And that's like the heart of the Bakken oil region and where everybody is setting up infrastructure. And so the city of Williston is in Williams County and the city of Watford is in McKenzie County. And we're looking at both locations for a different play. Both of them in office, though. If you look at the satellite map on the bottom right, it's kind of interesting. You see a cluster. You see all these big cities around. You see Chicago over here by the Great Lakes. You see Minneapolis, Minnesota, St. Paul up here. These are metro statistic hubs. But you see this big patch of lights over here to the west. That's North Dakota. That's all the gas flares, the natural gas flares from the oil sites that's making that light up like it is. If you look at a GDP map, you'll see that North Dakota smashes any other city in the country as far as GDP growth, where other states like California might be 3% GDP last year, and you have Georgia at 1.5%, Florida at 2%, you'll see North Dakota at 14 to 15% GDP growth. And that's because of the Bakken oil discovery. So you see a lot of political emphasis and everything going to this area, and that's what makes it so attractive, and it's here to stay. When we went into the market here, the risk that we were assessing was fourfold. One risk was what happens if oil prices drop? And of course, we've seen 10-year booms turn into 3-year busts because of that. And so that was one thing that we're looking at. But it costs about $50 a barrel to pull this oil out of the ground, and we're not close to that. So that's not a risk. And I don't think anybody is suspicious that oil prices are going to go down over time. They're most likely going to go up anyway, which is going to be good for oil business and, by the way, for Oklahoma City. The other thing is fracking. What about the political resistance to that type of drilling, that technology and fracking, and or fracture drilling is what they're doing. The risk for fracking isn't a concern. North Dakota, you notice if you ever looked at the oil region, you see Montana, which borders North Dakota on the west of this map, but you don't see it on the map. It takes about 8 months to get a drilling permit in Montana, or it takes 1 month to get your license to drill in North Dakota. North Dakota is a very friendly drilling state. It's a very conservative state, and so fracking isn't a concern when you actually go up there and you see how much money and how much infrastructure is going into this. The other risk that we were looking at was, what about oil production? What happens if it dries up? Well, with fracking right now, you have to realize that only what's available under the ground there is we're only recovering about 7% of what's actually down there. And with advances in technology and drilling capabilities, as we increase the recovery rate on that oil, you're just going to see production continue to go up. But to kind of give you an idea of how much oil is in North Dakota compared to Texas, which is our big oil state, you have 300,000 drilling wells in Texas, and it produces about 1.4 billions of barrels per day. In North Dakota, in just the few years that we've rediscovered or gone down and re-drilled where we already knew this oil was since the 50s, they only have about 8,600 drills, and they are producing about 800,000 barrels of oil. So you're at almost more than half of the oil production in North Dakota, and we're just scratching the surface of what's available underground compared to Texas, our big oil state. So I kind of put it into perspective for you, but validate all of this, and you can just do your own research, and you're going to see that it is sustainable, and the fracking is not going to be a risk. The oil prices aren't a risk, we felt, and then the oil production is heavy and it's deep, and it's going to be sustainable. It's going to be long-lasting. So the only other risk that we saw that we had to be careful of, and this is why we shifted from residential to an office pursuit, is what happens when there's a correction of supply, just like we saw in the high-density multifamily products out there. And so that's why we were gearing more towards a product that still had a hole to fill. There was pent-up demand for, but there was relatively very little competition and supply now and then also in the future. So what we're going to be doing in that area is actually focusing on the office space for that reason. And where our exit strategy...
Sorry, John, I think just quickly there, I think it's quite funny. Firstly, Henny's doing quite a lot of development up in Medupi, the old Ellis Russ, where they're building all the power plants. So he's very aware of a market that it changes quite quickly, but he's also concerned about, an oversupply with time if demand was to falter. And so when we were there, we were talking with the realtor on the ground there, and the guy was telling us how there was absolutely no space for him, and he had to sleep under his desk, and the chair kept falling on his head. And just to put it in perspective, it was literally a personal story, and the guy was like, I don't understand. Everyone is trying to do residential development, but there's just no office space, and I have a person coming in here every single week, asking me if they can sublet my office, and there's been 1,300 businesses that have moved to Watford in the last 2 years, and yet there hasn't been 1 square meter of office space that's been developed. So just to put it into context, what John's saying, those are the fundamental drivers. And to be honest, the guy kind of mentioned a few of these things and then started going on about some residential opportunities, and Henny pretty much backed him up and was like, whoa, what did you say about the office space? And that, as John said, is when we really started to focus on that opportunity and to understand it. So back to you, John.
Okay, so let's go into the actual development. Let me talk about Patrick first. Patrick is, we heard him on here a second ago. I don't know, maybe his phone cut out or something. I just texted him to see if he'll come back on. But Patrick's our guy on the ground there. Patrick has a real estate, residential, and commercial background. He actually comes out of Colorado. And
I'm here, guys.
Oh, hey, what's up, Patrick?
Yeah, sorry.
You want to say hi to the crowd and just tell us a little bit about yourself and why you are playing heavily in North Dakota?
Sure, I'd be glad to. Just let me step out of the wind here. As you know, it's very windy in North Dakota most of the time. I've been up here, and well, gentlemen, thank you for having me for this call. It's been very interesting to listen to you talk about all the different markets. My focus for the last 3 years has been the Bakken, primarily Williston, North Dakota, and I've come to learn a lot about the oil industry and the sustainability of it here. You know, that's the question that always comes up is sustainability. But my background primarily is a vertical builder and developer in the small developer in the Aspen Vale market in Colorado. And we came up here to do just that. My role has changed in the last 3 years, where I've been asked to bring projects forward, to represent clients in front of the county and cities to get their projects approved, from agricultural fields to a commercial zone or a residential zone, and for that matter, get their building permits removed and set them up with the right engineers and who the builders are and so forth. And I've done the same with John. John was referred to me through, I believe it was Tom Ralstead, who was the Director of Economic Development for the city of Williston and the region of the Bakken. So what I've been able to do is really get a good pulse on where the good projects are, where the real money is being spent, and where the market is going to give the investors a very good return. So that's been my primary focus for the last 3 years. I am here full time. My family still resides in Colorado, and I travel back and forth quite a bit. But like I said, I am here full time. In fact, I just got out of a county commission meeting this morning, and I'll be going to the city commission meeting tonight. So that's probably been more meetings than anybody except for the commissioners in the last 3 years, just to really get a pulse on how they like to hear, get things done and what they want to see and what their trigger words are and how to get things approved. So that's kind of my background. As far as the sustainability of this thing, John, I know you've studied it in depth, but every time I turn around and every time I go to a different conference, the numbers keep getting bigger and they don't get smaller. We went from, they doubled the recoverable oil about 3-4 months ago in the Bakken region, and it appears that they're about to do that again. They found some other layers down there that are deeper than the Bakken that have more oil than the Bakken. So they've discovered that there's actually 14 serviceable zones below the Bakken that will produce oil. When they talk about wells, there's 50,000 more wells to drill to fill in what they have right now. And if you're drilling 2,000 a year or 2,500 a year, you can do the math. That's a 25-year build out. And then you get into the stage of just maintaining the extraction. One of the things that I stress to people that come in here, there is no really bust in the oil industry. The bust is when all the drill rigs leave, but the oil that's coming out of the ground does not stop. If they were to stop today drilling, which they're not going to, if they were to stop today, we are still today 10,000 homes short and 9,000 apartments short in and around Williston, just in this region. When it comes to commercial, we just got a market study done from THK on another major project that actually the project that John's talking about here in Williston, and he seems to think that they're 4 million square feet of office space short today. Now, that's if they were to stop and pull out all the rigs today, just to maintain the extraction that is here right now. So this play, and I haven't played in the oil industry or in the oil market for a very long time, but the more I study this and the more I go to these conferences, everybody keeps pointing back to the Bakken that this is the premier oil play, arguably, if not in the United States, in the world. And it's the finest oil. It's the most desirable oil amongst all the refineries. And so they're not going to stop drilling anytime soon. Even if they hear talk about the price break on what is the bust point.
Patrick, do me a favor. There's a question here. Is the government also investing in property, and what type of property in the bucket? Hello?
Did we lose him?
I think we lost him. I think I can answer that, though. The land is actually owned. There's two types of rights. You've got the land use, and then you've actually got the mineral rights. And the mineral rights are owned by the locals. They've been owned for many generations. And you've got many farmers up there that have been poor most of their lives, and now they earn 25% of all the revenue that comes out of the ground. These guys that are literally earning a couple of $1 million a month for doing nothing, and they just sit on their farm and let the oil be pumped out. So it really is it's quite a unique situation. So the mineral rights are actually owned by the locals. John, I think I'm very conscious of time. Can we get on to the opportunities, and then if guys want to look, because we've still got the opportunity in Atlanta as well, just to run through, and then we can go in more detail if people want to, or we can even organize one-on-one.
Okay, sounds good. We'll go into more detail later on, but I'll go through these very quickly to kind of wrap things up. But you have two cities. Patrick is in Williston City. Williston's where you would typically fly in. It is kind of the hub. And then 40 minutes southeast of Williston, you have Watford City, which is where our closest office play is right now. This is one we're actively pursuing. We're going to be working with the real estate developer there on a joint venture. So this particular location is, if you look to the right of the screen here where the green square is, it's that whole development there. There's a golf course neighboring this development. The downtown area is over here where you see the pins on the screen. So this over here is the master plan development that we're going to be playing in, and they have their groundbreaking ceremony on August 28th. I just got the news of that, so they're moving along with all their development. And one thing that I should emphasize here about the Bakken oil region is that you have a lot of rural areas, and typically you have when everything started happening up there, you had these relatively unsophisticated governments and systems and everything that over the last few years have had to catch up, and they've done a lot of learning along the way. They weren't used to dealing with sophisticated real estate developers. Since then, you have groups from Phoenix, like the developer here is from Phoenix, Arizona. They're developing this land here, and you have to have unsophisticated systems and everything. About real estate. So this particular community here is he's helping us do some of the due diligence on this community here in Hunter's Run. It's the Hunter's Run Master Development. Inside of Hunter's Run, you have high-density residential apartment complexes. You have single-family homes. You have townhouses. You have industrial. You have retail. A medical building in here. You have a travel center on the southeast corner. And then you have some other type of office spaces in here. So this is a master plan development. Where we are in the master plan development is on this southeast corner. this corner in the community has one of the highest traffic counts in Watford City. And we are on probably the next best piece of real estate in this whole complex, which is right there next to the corner. So that's about a little over 5 acre piece where we can erect a 25,000 square foot footprint of a building. So that's 3 floors at 25,000 each floor. We're going to be looking at about a 75,000 square foot building. We are working with the real estate developer who's doing all the horizontal infrastructure. They're going to be contributing the land, and we are going to be providing the capital to go vertical and deliver this product. On the first floor, because you have, as you see on this back screen here, you have road frontage. On the first floor, we're going to have retail, and we're going to be going after
first
5
floor
to 10.
being ground floor. So just
Ground.
first floor being ground floor.
Good point. Ground floor is our first floor. So the ground floor is going to be retail component. The second floor is what we call office condos with spaces between about 1,000 square feet, which would be equivalent to 100 square meters, on up to probably about 500 square meters that we're going to be looking
so
for.
Basically in South African, sorry John, in South African terms, that's sectional title office space.
Okay. And then the top floor is going to be full service executive office suites, and we'll be bringing in the help of an operator for that third floor space to really optimize the building. The goal with this building is to exit in about a 3 to 5 year time frame. We have multiple exit strategies, but the one with the most conservative, the lowest ROI, would be to simply stabilize the whole building, revalue the building at an aggressive 12% cap rate, of which there are many institutions in the United States that would be interested in buying that stabilized building. One exit strategy is to peel off or sell out the first and second floor as a package at a 12% cap rate, and then that would recapitalize us to offset what our carry is for that third floor, which is the executive suites. That would be more of an income play for income. Another alternative would be to sell off the retail spaces on the first floor to recapitalize as we continue with the second and third floor office spaces. The point here is that there is a lot of different exit strategies with this, and it's going to produce on the low side, conservatively, on very conservative assumptions, about a 23% annualized return on investment over a 5-year window. Development wouldn't start on this property until about another probably 8 months to 10 months. And we can go over the numbers.
We've got to wait for the winter. We've got to wait for the winter to clear because we can't build over the winter. But I think, John, one thing that's very, very important here, and I'm sorry if you're going to bring it up, but I just wanted to reiterate it now, is that we've done a joint venture with the master plan developer, and they are throwing in the land as an equity partner in the deal, and they're bringing the land in at cost and then benefiting on the back end at the same way that we will be building the building at cost and then being a JV partner with them. We're in the final stages of doing the letter of intent with them and putting it together. Hello?
Hi, gentlemen. This is Patrick. I'm back. Sorry about that.
No worries. But the really exciting thing with that is that what it allows us to do is we secure the land, and then we go to market with regards to some preliminary designs and letting and leasing, and ultimately only once it's pre-let 80% would we actually go into the ground and construct the building. So from a risk perspective, the risk is seriously diluted by the fact that we've already got the contracts in place prior to actually going into the ground. So sorry, back to you, John.
Yeah, and another thing about this particular building, it's like Scott had mentioned, the real estate agents, the developer for this plot, anybody in the area, if you're ever up in Williston or Watford City and you're meeting with different people, you'll find yourself in the same restaurants, in hotel lobbies, in parking lots, in the retail centers, at bars. That's where everybody's meeting now. So there's an urgent need for professional office space in the area, and because of. Oh, go ahead.
No, this is Patrick. I'm back, and I concur. Yeah,
okay,
sorry, my phone went dead. I had to go into the restaurant and plug in.
Oh, no problem. So we were just talking about the need for office space up there.
Yeah.
Can you speak to, because I had mentioned before, it was interesting what you said, Patrick, as I mentioned, he follows a lot of the different permits. He knows what's happening with a lot of the developments in Williston. And as far as office goes, do you know of anybody who's actually planning on delivering anything? I mean, aside from the 2020 professional building that we had already
There is
looked at.
not. The only one is Hague, as I understand it. Hague Construction has bought a lot next to Buffalo Wild Wings down there, and they're planning on building a 20,000 square foot building. But that doesn't even come close to hitting what the market needs. I mean, that building will be full the day they break ground. They'll have it leased out, and because it just doesn't exist, John.
Yeah. So I mean, so to that point,
John,
part of the reason. Oh, go ahead, Scott.
No, I was just going to say, because the other thing is there's always two sides to every component, and the one is that there's demand, but the also one is in terms of experience. And I think what's very important is if you wouldn't mind just explaining a little bit about your experience with regards to service offices in Orlando, and then Henny's online, and Henny actually owns service offices in Pretoria. And I think it would be worth if he just gave his 30 seconds, because again, we're coming from a basis where this was not new. This was an experience in terms of our knowledge that we've already done before.
Oh yeah, I actually have experience developing the third floor space of an office building that was condoed out. So it was basically a condo building, and the third floor space we're creating a sub-association for, and we were pre-selling the whole third floor space. We basically pre-sold the whole third floor space to either people that wanted to own their space as opposed to rent it, because you don't see the full service concept with ownership opportunities, or you saw investors buying the third floor space because they were tired of dealing with pets and toilets on the residential side, and they wanted to spend $80,000, $70,000 on one of these cash flow boxes where you didn't have to deal with tenant-friendly laws. So and it's a great way for someone to kind of step in the commercial space. And that's one thing that I'll add is that when we develop this, everything will be a condo association. In other words, we will build it so that we have multiple exit strategies, multiple ways to cut the pie up later for the exit. So it's not just one deed. It will be multiple deeds or titles for each space.
And just, Henny, I'm not sure if, Henny, from your side, I mean, you've obviously got experience and you've done this in Pretoria. What was your thoughts on the project when you were there on the ground based on your experience locally?
Yeah, Scott, I think we're managing a couple of buildings like that in South Africa where we provide a type of office solution where you've got about 100 to 150 to 200 and sometimes 500 square meters per tenant. And my feeling is that there's a huge opportunity there. Obviously, we need to go to the market with the marketing study to determine the exact size of what would people need, because there's a lot of people, moving into the area, having meetings and having sort of, operations on the ground, and they need to support those people from a proper office environment. But I'm 100% convinced that this will work very well there. And with our joint experience, I think we'll be able to manage it properly. And I think this is a huge opportunity.
Yep. Also, one of my best friends runs arguably one of the most successful networks, privately owned networks of service office suites in the United States called Your Office. You can research that at youroffice.com. And he used to work with, he was a VP at Regis HQ, which is internationally the largest service office provider out there. So we definitely have a really good team in place to execute on this concept.
Gentlemen, this is Patrick.
Okay.
I appreciate the time. I need to step off this call now. I don't know if you need anything else from me immediately, but I'll be glad to answer any of your questions in the future. And I just send John a plethora of information about the Bakken region, some really good links and stuff, and take some time to look at some of that stuff. But I'll be glad to answer anybody's questions in the future.
Okay, thanks a lot, Patrick.
Excellent, Patrick. Well, thanks so much for coming online. We really appreciate it.
You're very welcome.
Patrick.
My pleasure. Bye.
So that's pretty much what's happening in Watford City. If we go back to Williston, where Patrick is based, Patrick is doing work in Watford City as well. But this particular project, Patrick is a minority equity partner, and So he's got the insight on this project, and once we've established our model in Watford City, assuming all goes well there, we're replicating the model in Watford City. And this location is one of the arguably best pieces of land in North Dakota because of the relocation of the Williston Airport, which is going to be right across kitty quarter from the street. So that's going to be followed by hotels and more office parks and so forth. But this is another master plan development about twice the size, 2 to 3 times the size of the one you just saw in Watford City. And the developer has already expressed a very strong interest in working with us to do the exact same thing in this area right here. And the office center of this community is right there in the green circle there you see on the screen. So that's on the north end of Williston where the new airport's going to be. So that's behind the development in Watford City with the Hunters Run complex. So unless there are any other questions there, we can fly through Georgia. Georgia is a pretty easy concept to understand.
Yeah, I was going to say, I'm conscious of time, so please, if we can run through the Atlanta stuff quickly, because there's a number of people online.
We'll do this really quickly. Atlanta is really easy to understand because everybody understands buying a stand, developing a stand, putting a house on it. And so this is a pretty easy concept. So that's what we're doing in Atlanta, Georgia. For those of you that have been following Scott and his team and or myself, you know that we've been working in Atlanta. I've been in Atlanta for about 2.5 years working, so I know the residential environment very well up there. And the opportunity in Atlanta is this. The institutions have come into Atlanta in the first time in U.S. history to buy single-family homes. And they're buying them, and they're turning them into rental properties, and then they're securitizing all those rents and selling those bundles of rents on Wall Street. It's the first time that's ever happened before. It's not happening in just Atlanta, but it's happening in all the metro markets in the United States. Atlanta is one of the hot spots for that. So what's happened was they've driven the prices up pretty aggressively over the last couple of years, and there was a lot of land that was already developed where builders did all the horizontal infrastructure. They put the roads in, the power, the water, the sewer, and then they mistimed the market, financing dried up, and they couldn't finish their communities. Yet you still have all these pieces of land that were fully developed that haven't gone up in the last few years because builders could not erect a property and be competitive with that price based on labor and material costs and compete with all the resale inventory that was out there. So you had resale inventory selling at maybe $40, $50, $60 a square foot, and new construction starts at maybe they have to deliver that between $70, $80, $90 a square foot on the low side. So they couldn't build. And so the last few years, you saw this land just kind of sitting there. Well, now, as of about 6 or 7 months ago, you're seeing these developed lots. They're ready to build on immediately. They have all the horizontal infrastructure in place. The roads are in, the street lights and everything, and now they're ready to be built on. And the prices on those lots we started seeing those lots sell for about $2,000 to $3,000, $4,000, and then just in a matter of a few months, because of all this institutional activity, these lots have now gone up to, in some cases, $40,000 to $50,000. So the partner we have on the ground there, Heinrich Kuhn, actually from South Africa. I'm not going to spend a lot of time with him, but he is a commercial real estate professional. He's based out of downtown Atlanta. He's been in the country. The guy is a really fascinating individual. He's brilliant, graduated from MIT, one of the most elite universities in the United States, and he's got an architectural background, but he plays in the commercial space. And he is also a CCIM, which is a commercial designation for some of the elite commercial agents in the country. There's only about 8,000 of them on the planet, and about 2/3 of them are in the U.S. And he is one of the distinguished few. So Atlanta, if you're not familiar with where it is, it's in the state of Georgia, just north of Florida, in the southeast quadrant of the United States. Atlanta is the hub of the Southeast Economic Center, with a population of about 5.5 million. Their GDP is probably about 130% of what Johannesburg's GDP is. So the 3 locations that we have subdivisions tied up is around the city center there in the suburbs of Atlanta, one up north, one out west, and one in the south. The first property is 20 developed lots. You can't see the screen, probably you can't see the houses that are already done, but this community has already houses up. About 50% of the community is already finished. All the horizontal work has been done. We're picking up these lots at about $4,500 per lot at a price of $90,000, and then we're going to be building these. Some of these will be liquidated immediately so that we can recapitalize and show a quick return for our investors. But the lots, just to keep in mind, the replacement value of lots is anywhere from $20,000, $30,000, even upwards to, you'll see a community in here that we're picking up where the lots previously sold for about $140,000, $150,000. So we're picking up these lots at a fraction of what they cost to develop them. If you were to do buy the raw land yourself, do all the horizontal and put the power in, the water and the sewers and the electrical, if you're going to do all of that, you would be at a price about 5 times more than what we're picking these lots up for. The properties, the houses in this subdivision. Oh, go ahead.
Sorry, John. Also, very importantly, when you drive around, I mean, these lots are 1 acre lots, which I don't know how big is an acre compared to a hectare. I haven't, but it's a quarter of a hectare. So it's a quarter of a hectare. I mean, they're big lots, and they're really nice homes that are already built and established in the community. I mean, you can see the picture in the bottom left-hand corner, and I can actually send you some of the videos that I took. But I mean, really, nice stately homes. So I mean, it's unbelievable the value in terms of the lot prices.
Yeah, and the properties here, you have a lot of different exit strategies, but one of the things that we're obviously always looking at is two things. What's the absorption rate for houses in the community? Is there activity, or is it a stale community? Because that evidences how desirable the community is locally. And then secondly, what are the exit prices for those homes? So if we were to build a home now, what is our exit price compared to our competition? And so that's how we kind of base our financials when we're looking at each one of these communities. But in each one of these cases, I don't show the numbers on these because, frankly, the numbers are just way better than a lot of the things that we've seen on a lot simpler play. So these are very easy to understand, aggressive returns, and multiple exit strategies.
But also, I think very importantly, this very much fits in with the growth plan. It's get in, take advantage of the opportunity, and then exit quickly with a good return.
Yeah, this community right here, I know Brendan and Scott, you guys have some great videos of it. This is a golf course community around a small lake, and you have a country club with $1 million house next to it. This community, the golf course, was stagnant for the last few years. It was recently purchased and is now being revived as we're talking. They plan on opening the golf course in the fall of this year. The lots in this community, we have 66 lots in this subdivision right here at a price of about $10,200 a lot. These lots previously sold for about $35,000 a lot. And the houses you can see on the screen here across the street in the same subdivision, the exit prices on those are about $180,000 to $250,000 per house. We are doing some research on this one right here. The due diligence got delayed about 30 days because we're working with the city on relocating one of their facilities in the back of the community. And we're going to give you an update on that as time goes on. This community here has probably the most wow factor to it. This community is off of Highway 400 up north, the north side of Atlanta. Again, all these communities are just the few that came through all of our filters starting from about 140, 150 different subdivisions. But this particular one stands out because the exit prices on these houses is about $400,000 to $500,000. And we're going to be picking up these lots at about $16,000 a lot. The lots previously sold for $30,000 to $40,000 on the low side, on up to $140,000 on the high end. This is a very high-end community, and as you can see, the houses reflect that. The lots are beautiful. The community is already finished out. As you can see, half of the homes are already finished, and people are living in the community. The clubhouse is finished as well. So it's a very easy thing to kind of go into. The only challenge with this community, it's not really a challenge, but we have to be sensitive to the excavation cost to move dirt, because that's one of the biggest expenses we incur here that we don't in our other subdivisions, because it's a rolling terrain. And whenever you have rolling terrain like that, you're building basements and you're moving dirt, and that becomes one of the biggest, most expensive line items in your construction. So that pretty much wraps up the 3 different regions that we're focusing on actively right now. We still have some other things in the pipeline that we're looking at. Of course, we're always got our feelers out there in working with our partners on the ground. But those are the 3 areas that we're in right now with the projects. Oh, go ahead, Scott.
Sorry, John, just quickly. I think it's very important for people to understand. Our partners on the ground there have analyzed over about 150 projects, which they've sent you probably, you need to tell me, I think it's roughly 15. When Henny, myself, Brendan, and Vaynant arrived, we landed from Johannesburg. We landed at 7:30 in the morning. You put us in a car, and you drove us 600 kilometers around Atlanta looking at projects. So, I mean, we then looked at probably another, I would say at least 6 or 7 projects, and we've whittled it down to kind of 3 or 4. And obviously it's ongoing and it's changing, and we're in the process of due diligence. But I just want people to understand that if you go on the LoopNet for this world and whatever, you'll see lots of stuff. But actually to find the real opportunities, you've got to have the right people on the ground to be able to do the due diligence. And I want people to understand how much has happened behind the scenes to just get down to those final 3 projects. And those final 3 projects are not finally signed off yet. We're still going through the due diligence in terms of everything that John said. And John, I'm not sure if you can just show us quickly on your screen if you've got available, but just the full schedule we've put together from a due diligence perspective when we're looking at projects, because there's lots of projects we've looked at that we thought were awesome and that failed something on the due diligence that got them kicked into touch.
Yeah, here's an example of the checklist that we take care of locally. So we're looking at, we obviously are always very sensitive about the time that our deposit money goes hard. And if we're picking up a property or we're contracting a property and tying it up for due diligence, it's already past some of our high-level financials. We already kind of know it works. What you just saw on the screen there, if you saw that video, was a community that we passed on. As you saw, it was a very established community. The lots look great. The homes look great. There was a lot of resale activity where the homes were being picked up very fast. The problem was the numbers didn't work in that community, and so we had to pass on it. But the community was a little bit further south than we wanted to be, so that's why we passed on that. But as you can see, there's some really good projects out there that others will find pretty attractive that we're passing on. But this is, once we've tied up a property in Atlanta with this model, these are some of the things that we're looking at. Where, again, you'll see we're sensitive about the time that our deposit money goes hard, because we have to wrap everything up before then. We're looking at what type of systems they have, if there's water, power, sewer going to the community. We're looking at the excavation costs potentially. We're factoring in what the costs are going to be if we have to build basements. We're getting all the surveys, the plats. We're pulling the homeowners association documents to see if what the architectural guidelines are to build in that community, to make sure that we're not making any assumptions on our build to find out later that we can't build, because that's like your body corporate documents. And so we're researching those. We're checking to see if they're in floodplain areas to make sure we're not building in a floodplain. So pretty much we're doing soil testing to be sure that if we're going to install a traditional septic system, that it will work okay, or if we have to install a modified one, that could cost a lot more. On one of the communities you just saw, we're renegotiating on one of the properties we have a contract on, because we found that 2 to 3 of those lots have bad soil, or soil that we have to install a different type of septic system for, that adds about $15,000–$18,000 of cost to construction. So those are some of the things that we're looking at. But subjectively, some of the other things that we're looking at is how much of the community has houses on it already versus how much are empty. We are looking at what the exit prices are, as I told you, what the absorption rates on those houses are on the exit, in case we have to sell to the retail market. So that's kind of an idea of what we're doing on the due diligence. And we have we fully take advantage of the 30 days we have to do that on each one of these properties.
And I think what's very important there, just to explain as well, John, is that as an exit strategy from a wealth migrate investor perspective, is that we're picking up the lots at a very, very affordable rate. Now, you can't go and obviously buy, if you're buying 66 lots, you can't go and buy one lot for $10,000. It doesn't work like that. So what our idea is, again, to sell off half, either into the local market in Atlanta but even more so into the South African market, to provide South African investors with an opportunity to buy an American property really, really, affordably, and then also give them the opportunity to build, plot and plan, like we call it, or house and land, as they call it, and then either, sell off the house or rent the house, which we believe, most people want to rent, or actually just keep the land. Maybe they can't afford to build a house, but it allows us, from a wealth migrate perspective, to churn and burn quite quickly, and then and recapitalize the project, and then with the remaining 50% to build out the houses, do the development, and get the ultimate upside, and either sell them into the local market or to keep them. So that's very much the strategy. And as like John said, there's actually 3 exit strategies. But the most important thing is that the market's moving fast, and there's a real opportunity to buy land at really basement prices with the potential upside.
So that wraps up my overview. I haven't had a chance to look at the questions, but go ahead, Scott. I'll pass the mic over to you now.
Okay.
Sorry, guys, my phone got cut off. I'm just calling back in. John, what did you hear there? Where did I get cut off?
No, I heard everything pretty much. I was just saying that I'm gonna pass the mic back to you so you can bring this to a close.
Okay, excellent. I'm literally just dialing back in. If you just give me 2 seconds.
Okay, while we're doing that, we've got a couple of questions here. Is a lot just a plot? Yes, so they call a lot, what we would call or a plot. A lot. Yes, what you make it?
Yeah, Megan, if you can just mute yourself. Sorry, you going there, Brett?
Yeah, I was just answering the questions there.
It sounds like the audio is really bad there, Scott. Do you have? Are you speaking to a mic?
I'm not. I've phoned in. It's not working.
Okay, this is a little bit better.
Can you hear me now?
Yeah.
Yeah. So I was just trying to let Brendan see. So guys, just in terms of the next steps, if you are interested in anything, and even if you are a current investor, just let me know if you want to talk to me. I can give you a call on the telephone and discuss it. I mean, it's very difficult to take, basically 2.5 weeks worth of buying and due diligence, in terms of everything that John and Henny and Bainant and myself and Brendan are doing, and try and condense it into a short amount of time. So give me a call. I will be speaking to people. We only want to deal with sophisticated investors. So I'll be basically vetting people, understanding what they're looking to achieve. We only want to work with like-minded investors. So my objective is to try and make sure that we get a winning team together with like-minded investors. So it's not available for everyone. This is really for similar sophisticated investors. Then John is coming out, like you mentioned, from the 1st to the 15th of September. And what we will be doing is we've got our USA investor breakfasts around the country, but we'll also be doing one-on-one appointments with sophisticated investors. Again, I'll be understanding what people are trying to achieve and setting it up. So if you are interested, let me know. We need to speak first, and then I can actually set up the one-on-one. We do have the event that Neil Peterson's putting on, Real Estate Invest Magazine, which is the Wealth Masterclass. We're actually launching our book there with Clem Santa. There's Dolph de Roos and a number of other really kind of world-class speakers. And John has actually been invited to speak on behalf of American Property, which is hugely exciting, that he's being recognized for his knowledge and everything else. He'll also be our guest at the USA Investor Breakfast, which if you're interested in Durban, it's on the 4th of September. In Cape Town, it's on the 6th of September. In Pretoria, it's on the 11th of September, and in Johannesburg, it's on the 12th of September. So, if you want to come along to breakfast, we're not going to do a usual presentation style. It's going to be a Q&A. Come and learn from John in terms of what his experiences and what he's doing. And then lastly, our last buyer's trip for the year is going to be the 25th of October. We're going to be going to all these areas, all these projects in Oklahoma, in North Dakota, and in Atlanta. And there's going to be a combination between a Health Migrate buyers trip and the usual buyers trip for people that want to invest in property. So if you want to come and kick the dirt, have some fun with us, and most importantly, meet the partners on the ground and see the opportunity, then you've got an opportunity to come on the 25th of October for about 10 days or so. And for those of you who are interested, we've also managed to organize a weekend with Jack Welch, which is the ex-CEO of General Electric, one of the most respected businessmen in the world. So if you'd like to come and learn from him. So I think, I am conscious of the time. That's everything from our side in terms of the call to action. If you are interested, just get hold of me, send me an email or send a message through. Just ask me to give you a call, and Michelle can set up a telephone appointment so that we can give you a call. It'll probably be next week because I am in a strategy meeting this week in terms of our investment. But we can give you the call. Brendan, let's go through some of the questions. And just before we do the questions, I really want to thank everyone for being online. I apologize for how long it's taken. I think there's so much information that John wants to share with everyone, and we're really excited about what we're doing. For those of you who've got questions, we'll stay online and answer those questions. It's been great having you online. Henny, thank you so much for coming online this evening and sharing in terms of your knowledge and experience. Brendan, it's great to have you online. And John, we always respect the fact that it's the middle of the day there and you've given up 2 hours to really explain what's happening on the ground. And thanks for also organizing the different partners, and Ed, if he's still online, the legal guys and all that. So thank you to everyone who's been online. But we're going to stay online now if anyone wants to in terms of some of the questions. So let's run through them. Ricky had a good question. He said, how will the funds be distributed and what is the distribution waterfall of your commission? Is it based on capital called down or capital available? Is the return calculated based on per project basis or the total on funds available? So it's very simple. It's per project, Ricky. And it's also, in terms of the returns, based on per project once the capital is deployed on a project. And in terms of the capital waterfall, that's a sophisticated term that I had to look up on Google to understand what you were actually trying to ask me there. But basically, it's what it means is how are the distribution, how are the profits paid, and and in what order. And to answer your question, the first return is paid to the investor, and only after a hurdle rate has been achieved. And there are 2 different hurdle rates depending on different projects, either an 8% hurdle rate or an 11% hurdle rate. Only after that do we share with the investor on the upside. We only benefit after the investor's benefit, if that answers your question, Ricky. Okay. So another good question was, can you cross over between the growth plan and the income plan? I'm not really sure what the question means in terms of. I think in terms of income plan, can you cross over between if you really invested in the growth plan, take some of that income out and put in the income plan? So the capital invested in the growth plan it's got a 2-year lock-in in terms of the projects and the return. But every distribution, then one can either re-elect to reinvest, because effectively there's a special purpose vehicle per project. So you can reinvest or you can take it out and invest in the income plan. Does that answer your question, Brendan? Another question is it a lot? Yes, a lot is a piece of land, but most importantly, it's a service piece of land. So it's a service piece of land. It's already got, they call them the pipe farms. It's already got all the services, the electricity, the water, the sewage in place. And like John said, and I want to reiterate this, to service a piece of land in today's market would cost between $25,000 and $50,000, and we're buying them for between $4,500 and $11,000. Well, actually 16, I think, was in that more expensive suburb. But I mean, just to give you an idea of value. That's a great question. And coming from John, who's one of the most kind of people that bases everything on fundamentals, and at the moment is worried about Canada obviously attacking America because he's buying guns and gold. What is your thoughts on a recession and how economically resilient these opportunities are that we've been looking at, John?
Yeah, that's a really good question. There's people with financial and economic degrees that I don't have that have conflicting opinions and answers, so you're going to get different answers wherever you go. My perspective is if you have good, strong, basic fundamentals, then there's no way I can predict what's going to happen. Like I said, there are people that are bigger experts than I am, so I don't have a crystal ball on what that would come. But I'd be kind of curious to know what the why, what is it about a recession, or what's the driver you think would suspect cause another recession? You know, part of the reason that we have a saying inside of Wealth Migrate, we're looking for recession resilient or economically resilient projects and markets. And so when you're dealing in front of oil, either directly like in Bakken or indirectly like in Oklahoma City, and you have low jobless, like in 2 of the 3 markets we're in, you have some of the strongest fundamentals when it comes to unemployment, local incomes. So if there is going to be a recession, we're going to see we're going to have small bumps in the road compared to anybody in any of these other markets. But you know, I don't have a crystal ball, so I can't say is it recession proof. But I can say that, you know, we're in the United States, and we're in the pockets of the United States with the strongest economic fundamentals. I would
also say, I think it's a great question, and it's certainly something that we will be covering at the USA Investor Breakfast. You know, to come along and we'll bounce that question, because we've done a huge amount of research between Brendan, myself, John, and Henny in terms of, you know, answering that question and how sound is the American economy and what is the impact of the debt they've got. And I mean, to be honest, I'm writing a book which will be finished at the end of the month, which we're doing with Clem Sunter, which can answer a lot of those questions. But I think the most important thing is that in any market, you need to understand what the worst case scenario is. And if you can manage that worst case scenario, then everything else is upside. And you're dealing with people who are risk adverse in terms of Brendan, Henny, and myself. From the investment committee side, we're working with John, who is risk adverse. So it's actually great because we're going in, we're looking at opportunities, we're being as conservative as possible, we're looking at all the risks that are around. And if we can manage those risks, and if we can manage the worst case scenario, then the rest is upside. And that's the philosophy that certainly has helped me in my investments. And I know very much from Henny's perspective, it's one of the reasons that has allowed him to not be directly affected by the global financial crisis. So, you know, I think that's very important. Is there any other one, Brendan? Okay, guys, so ladies and gentlemen, thank you very much for your time. It's been awesome having so many of you online. I think the most important thing, just to reiterate, I'm going to send you an email. Please look out for it. There's going to be some links, the link that John sent through. I'm also going to send you a video, I don't know what you call it, but like a graphic video of some of those master plan developments in North Dakota, so you can get an idea of the type of infrastructure and what we're doing. I'm going to send you some videos in terms of the land opportunities and what we're doing in Atlanta. And obviously for anyone who's invested, please just, if you're interested in any of the financial numbers, please let us know. John has done very thorough, detailed analysis. We're putting PPMs together, which stands for Private Placement Memorandums, that will all be in place by the end of the month. But most importantly, you need to give me a call or tell me that you want to speak on the telephone, and Michelle will set up an appointment, and then we can actually run through what you're trying to achieve. And as I said, we can select the type of people and the type of partners that we want to be able to achieve this with. And then when John comes out, we can really get moving. What was your thing there, Brent? On the contract, and then you need to get that. Okay, guys, you need to get the contracts back. The first Growth Investments 101 LLC is closed, and we're literally closing on some great opportunities now. And you don't want to be left on the sidelines with your money stuck in the bank and not being involved. So please let us know. As we said, the first tranche is closed, but we are opening up new tranches with these new opportunities. So give us a shot. It's been awesome having you online. We do thank you a lot, John, for your time. And, you know, I think one of the most important things of South Africans is a lot of very wealthy South Africans at the moment love living in South Africa, but they're starting to choose to have their money live elsewhere. And that's not a problem of South Africa. It's actually just wise to diversify. But the most important thing is that people are scared because they can't find tried and tested techniques. And that's why we've all done this for a very long time. We've got the right partners on the ground. And as Nelson Mandela said, money won't create success, but freedom to make it will. And really, from our perspective, you know, you've got all our contact details there. If you want to give us an email, give us a call, go to the website, take a look. We'll put all the videos up and everything else. But I think the most important thing from Henny, Brendan, myself, and John is call us if you want to partner with us. We're looking at economically resilient global investments, and most importantly, we want to help people create global wealth. So thank you very much, John. It's been awesome. Thanks so much for all the effort you put in terms of putting everything together. Everyone online tonight, it's been great. Go out there, have a great evening, And most importantly, I hope that you create global wealth so you've got the freedom to make whatever decisions you want for you and your family in the future. Good night.
Good night.